Good morning and welcome to the Killik & Co market update. Markets have continued to move higher this week despite the protests that we've seen across the US and the rest of the world following the death of George Floyd. There has been some concern that the lack of social distancing at protests could result in another wave of the coronavirus, and yet markets do continue to move higher. Here's a chart showing the S&P 500 over the last 12 months, and as you can see, the index has risen over the last few days. The index is now quite firmly above where it was 12 months ago, and it's back to where it was in December. So this really shows just how impressive the recovery from the lows of March has been. Over the last few months, we have seen quite a strong outperformance of growth stocks in comparison to value stocks. If you imagine that at the start of this year you'd put together a portfolio of the 50 most expensive stocks in the S&P 500 and also a portfolio of the cheapest stocks in the S&P 500. Today, that portfolio of expensive stocks would have gained 8.7% and that portfolio of cheap stocks would have lost 21.5%. So that really illustrates the extent to which growth stocks have outperformed value stocks over the last few months. This week we've also had quite a big reshuffle of the UK's FTSE 100 index. If you bear in mind that the FTSE 100 contains the 100 largest companies on the London Stock Exchange by market capitalisation, and this is worked out by multiplying the number of shares a company has by the current share price. Over the last few months we've had some fairly major moves in share prices, and that has caused some fairly major change in market caps. This quarter we've had 8 changes in the FTSE 100 index. 4 companies have been kicked out and 4 new companies have been promoted into the index. Here on this slide we've got a summary of the companies that have left and joined the FTSE 100 index. On the top level we've got companies that have been kicked out, and I don't think these will come as much surprise. First up, we've got travel companies EasyJet and Carnival Cruises. No surprise that that's a sector that has not been performing well over the last few months. We've also got Meggitt, which makes a lot of components for airplanes, and finally we've got British gas owner Centrica, which has been performing poorly for a number of years now. On the bottom level, we've got companies that have recently joined the index. We've got HomeServe and Kingfisher, which owns B&Q, and that just shows the amount of money that people have been spending on their homes during the current lockdown period. We've also got Avast, which is an internet security company, and finally GVC, which is an online gambling company. So these changes to the FTSE 100 index really give us a clear idea of the types of companies that have done well during the lockdown and the types of companies that haven't. And finally this week, the European Central Bank has decided to leave interest rates on hold. However, it clearly does believe that the economy needs further support because it has decided to expand its pandemic emergency purchase program. And this is essentially the quantitative easing program that was put in place to support the economy throughout the coronavirus. The bank will be stepping into markets and increasing its purchases of bonds, and this will have the effect of pushing up bond prices and lowering yields. If you have a look at this slide here, you can see that a number of 10-year government bonds across the Eurozone now have negative yields. On the top line we've got Austria, Germany and France. All of these 10-year government bonds now have negative yields. On the bottom line we've got Greece, Italy and Spain. Now these yields are still positive, but only just, and this really gives you an idea of how low yields are across the Eurozone at the moment. If you bear in mind that Greece almost went bust in the fairly recent past, and now people are willing to buy Greek government bonds with a yield of barely over 1%, it just gives you an idea of how much risk people are having to take in order to earn a positive return. So the effect of the European Central Bank's latest actions will be to force people to take even more risk if they want to earn a positive return. Moving on to the week ahead, it's looking fairly quiet on the calendar, but we have got results out from real estate investment trust London Metric. That's it from us. Have a great weekend and we'll see you next Friday.